welcome to Forex Trading Analysis. It's 11:07 p.m. on July the 25th. And today we're going to be looking at just two pairs, but quick risk disclaimer before we get started. So foreign exchange trading carries a high level of risk. Before you decide to trade foreign exchange, we encourage you to consider your investment objectives, your risk tolerance, and trading experience. It is possible to lose some or all of your initial investment, so don't invest money you can't afford to lose. Seek advice from an independent financial or tax advisor, and all information provided is for educational purposes only and should not be construed as trading advice or counsel. So, the news for tomorrow includes President Draghi speaking again for the euro, as well as 3 US dollar news, unemployment, pending home, and core durable good orders, which are all flagged as important and are all relatively important. Probably unemployment being the most important, and right now it is at 381K. If I were to guess, just based on other unemployment numbers, I would say that the actual number could possibly be a little bit lower than expected, or the forecast is, just based on the fact that economists, especially for the dollar, have really been missing to the long side for a lot of these numbers recently. So if I were to speculate, I would say that the U.S. dollar number will likely be a little bit worse than what is anticipated, but that's just my thoughts based on the last sort of the trend in the last few U.S. dollar news updates. Anyway, so looking at charts, this is the chart of the Aussie, the 1 hour chart with 200 and 100 hour moving averages on it, as well as RSI 14 period. And as you can see, we have just broken above the 100 and 200 hour moving average. We're currently trading at 1.03203, and this is a pair that has been sort of rotating up for the last few days, as well as the last few weeks and month. About 2 months now, we've been in a pretty consistent uptrend for the Aussie. While we've seen, I'm sure you've looked at the chart of the euro. Seeing the euro fall and fall and fall, and the US dollar gets stronger, but the Aussie continues to push up. So what this is telling me is that there's a lot of demand for commodities right now. Australia is a huge commodity nation, and that makes sense because China is likely to buy a lot of its commodities from the Aussie sector. So this will strengthen their currency, and we've seen this really play out in the past few months. So definitely for a longer term trade, if you are looking to buy the Aussie, I would recommend that play. But for now, we're going to be looking at a little bit more technical levels. So like I said, we have just broken above the 200 and 100 day moving average, as well as just printing just above the 200 hour moving or 200 day. Sorry, we are just above the 100 and 200 hour moving average, and we have just printed above the 200 day moving average. So this is a very, very, very large break for the Aussie dollar, and we do still have a lot of room to run to the upside. So if you are looking to enter a buy order, this is definitely a good place to do it right about now. And if we do start to see a rotation to the upside, then this will confirm that we sort of have seen a break and a continuation to the upside for the Aussie dollar. This definitely is a pair that I do like. Just all the technical levels and fundamental factors seem to be lining up right now. Definitely the Aussie, I do think, will break the highs seen back in February of 2012, and I really do think that the Aussie does have a lot more to push to the upside. I think eventually we could see around 1.1 and a little bit, that will be a little bit further in the future, but I really do like Aussie right now as a little bit longer term play. Second pair I like right now, not as good of a setup, but also very interesting, is the pound Swiss franc, which I was advising to short a little while ago, just up when RSI was in overbought conditions, and we sort of have seen a little bit of a rotation to the downside. If you're looking on the daily charts, this is around 120 pips, so a really nice trade if you are sort of a short-term swing trader. And one thing that I do like to see from the pound Swiss right now is that we really haven't had much of a reversal in terms of corrections, and we've only seen about 30 pips to the upside and really almost nothing to really consider a large break. And this is coming after a huge bar to the downside for the 1 hour. back at 8 o'clock on the 25th today. And I really do like the fact that that the momentum indicator is pushing to the upside while the price continues to sort of move to the downside and hint at further selling for this pair. So first levels I will be targeting are first of all the close of this particular bar, which is at 1.52748, and then possibly we do have some more areas of support at the close of this particular bar, which is 1.52029. So those are going to be my first levels. Those are going to be my first levels for potential move back to the upside. But for now, I really do think that the pound Swiss will start to fall over the next few days, and we do have a nice area to define our risk here, as the 200 hour is sort of sloping to the downside right now, and price is just below the 200 hour. So definitely another good place to think about selling a pair like this. And like I said, Aussie I do consider to be a buy for the next few days. So that's all I have to say right now. Thank you very much for watching. Please follow us during the week at Synergy FX for more updates, and good luck trading.